My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today we've got a very experienced real estate entrepreneur on the call with us. John Azar has been in the business since for a hell of a long time. John, I mean, he's had like 2 or 3 or 4 different real estate companies over the years. You name it, you've seen it. These days, John has built up a very impressive business, Peak 15 Capital, and they work with a lot of operators and sponsors and people that are in all sorts of different kinds of real estate investing to partner up and to help fund their deals. And today we're going to be talking a little bit about growth as a contrarian in a down market and how to keep your spirits up when the world is kicking the crap out of you. So John, welcome to the show. Great to have you.
Thanks so much. Appreciate you. Thanks, Ron.
So John, I've bumbled my way through an introduction there, but maybe give us a little snapshot of what, at the end of 2025, what do you guys do in the real estate space?
Yeah, no, a great question. Because sometimes people go to our website and they still ask me, what do you guys do? So we're trying to do it better in representing what we do on our website as well. So we are a liquidity provider. Very simply put, we are a liquidity provider and a capital provider to
okay, for those of us that don't know the difference, what's the difference between a liquidity provider and a capital provider? What does that actually mean?
Liquidity provider meaning that we are your way. So sometimes principals and operators want to do deals, but they just don't have enough in their accounts or whatever to take care of the GP contribution into the account. Meaning that if a deal requires $10 million of equity capital, and their portion is $1 million, which is what it typically is, anywhere between 10 to 15% should come from the principal, from the GP. Yeah. That $1 million is the liquidity that they may not have, and that's what we come in and so you got an operator who's got a smoking deal. They don't have $1 million in the bank, but they've got maybe the deal under contract. You guys can work with them to provide that liquidity, that $1 million, to bring the bank balance up to what they need to be. That's right. Or they may have $1 million, but they just don't want to spend it on one deal. So they instead of spending $1 million on one deal, maybe they want to spend $500,000 on one deal and $500,000 on another deal. So that's where we come in. That's where we would come into play. We would come in and partner with them. Split both deals with them, because it's better to do 2 deals than 1 deal and spend all your money on, or even more, even 3 deals. And then we would bring alongside of us one of our programmatic institutional partners and fund the whole deal, fund the whole thing together.
Okay, cool. So that's the liquidity side of things. And then bringing on the institutional partner, that's the capital side.
That's the capital side of things. Yeah, okay. Correct.
So who are like the ideal partners you're looking for that you guys work with your company?
It really, I mean, Dave, anybody who is doing a deal and who knows what they're doing, first and foremost, and who are knowledgeable in certain markets and have the experience and the background. We don't do deals with very green, fresh operators. That's not us. So somebody. But there must be some sort of a minimum sized deal to make this work. Yeah, it's not about the size minimum per se. It's more about the experience that we're looking for. So somebody who has a couple of 100 units to their name could. Sometimes we work with them. Someone who has 2,000 units to their name, we could sometimes work with them. But it just depends. If you have a 200 units to your name, but you have the experience, have come from a big shop, have the execution experience, have done a couple of turnaround opportunities, or maybe have a couple of full cycle deals, then we're fine to work with you. So it's not about the size of your portfolio per se. It's more about your experience and what you've done and what you know about that market in particular, because we're depending on them to be our asset manager in that market. Right. So we want to make sure that they know what they're doing in that particular market or sub-market. And they have the experience to run the deal, because again, at the end of the day, they're running the deal. We are just their capital partners, and obviously they're co-GP, but they are running the deal for the most part.
And from your perspective, like what size of a deal makes sense? What's the minimum size of a deal that makes sense for you, or what's the range?
It's a wide range because we could do deals as little as, the deal size wise. I mean, we could do deal size anywhere between, let's call it, 5, 6, $7 million, and we can do deals as big as $500 million bucks. I mean, we just closed on a deal that was almost $600 million with a co-GP.
Very cool. Very, very. Okay. Now that's giving me a good idea. Now we were talking a little bit off camera that you guys are pretty much, what did you call that? I think, asset agnostic or something.
Asset type agnostic. That's right. Yeah. We are asset type agnostic.
Yeah.
So we are, I mean, our background is multifamily. As you know, my previous company before this, which still around, it's just a portfolio that my brother and I ran together for a long time. My brother now runs it and full time. After we started sunsetting a good portion of that portfolio in 2020, called Mac Venture Partners, we were vertically integrated, meaning we had property management in-house and we only transacted multifamily. When I launched Peak 15 Capital in 2020, end of 2020, we decided to be a private equity company as opposed to a syndication company. And we wanted to be, again, that liquidity provider, capital provider for sponsors, operators, and not just a multifamily, because we thought we were very return-driven, alpha-driven, and there's a lot of different asset types that made sense for us, other than multifamily, that obviously has the right return profile, the right metrics for us. So we would look at multifamily. We would look at we're under contract now on our flex industrial space. We would look at ground up development for multi. We would look at ground up development for single family BTR. I mean, heck, we even have a portfolio of car washes in our fund right now. So it really is. The operator has to make sense first and foremost, meaning the partner, and then the deal obviously has to make sense and be accretive for us and profitable enough for us.
Very interesting. So I'm sure all of the deals are your babies. You're invested in all of them financially and emotionally to a certain degree. What's one of your favorite ones recently that you guys have gotten involved in? Maybe unwrap that one for us.
Oh gosh, I mean, my favorite one actually is our most recent deal, and it's because that has shown the what's going on in the market. It's actually not the last deal that we closed on, the deal before that. So we closed on a deal in Houston, Texas, that is a large mixed resi, meaning that it has apartments, single family homes, townhomes, all under one roof. It's a gigantic deal. It's over 900 unit deal.
And it exists already, or you guys are building it?
Oh, no, it exists. It's 1990s product, most of the vintage, and it's like I said, it's in Houston, great area. The operations are great. The collections are great. I mean, our property management company is doing an amazing job on it. So there was nothing wrong with the deal on itself. There was nothing wrong from a financial standpoint. It's just that the operator or the owner at the time just wanted to get out, and they just didn't want to be in the multifamily business anymore. They saw the difficulties in the market space, and they've been in that space for a long time, and they just decided to cash in their chips and get out. And we were lucky enough to be
off into the sunset.
Right off into the sunset. Actually, believe it or not, the sellers of this deal were donating almost the entire profit to a charity from the sale of that deal. Wow. So that tells you how much they've already accumulated in wealth and to be able to give away almost $50 million in nonprofits.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Oh, that's beautiful. Okay, very cool. So this business, you've been running it for the last 5 years. when you got into it, things were go, 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 and especially in the multifamily space. Then we had a major correction. So the kind of the theme of what we're going to be talking about is growth as a contrarian. So tell us a little bit about that and how your experience of being through a few market cycles has affected your outlook on investing these days.
Yeah, that's a great question. I mean, when you go through different market cycles, when you get beat up in different market cycles and different asset type and asset classes, you get to start to appreciate that, hey, not everything is going to be zagging when everything else is zigging. So you start to develop this eye for, well, what is working outside of my normal box? So everybody has a box. Everybody, you hear the term, my buy box is this.
Yeah.
And when everybody's buy box is exactly the same, well, why are people surprised that there are competition in the marketplace and prices go haywire? Because, everybody's buy box is exactly the same. Right. So the only way to change the game and to make an impact for yourself and your portfolio is to change your buy box. And not necessarily the demand that you want out of what you want to buy, meaning that don't compromise the returns, don't compromise your underwriting, don't compromise how you look at deals and underwrite deals and do your assumptions, but at least maybe look at different types of deals that you're doing, or maybe different type of structure of the deals that you're doing. It's fine to stick to one asset type, such as multifamily, but instead of doing normal run-of-the-mill multifamily, start looking at them in a different way. Maybe talk more to lenders, maybe talk more to current owners and operators that maybe talk more to some of your friends who are in the industry and see if there's a transaction that could be had off books or off market. Because believe me, once a broker brings you a deal and tells you this is off market, it's not off market. It's just not. Let's just put it that way. It's not off market. There's no such thing as a broker bringing you a deal and telling you it's off market. It is not an off market.
What are they actually doing, John? They've already run it by a whole bunch of people, or it's
that's right. It's off market in the sense that instead of them taking it to sending it to 1,000 people on their email list, they're sending it to maybe 100 people.
Yeah,
instead of 1,000 people. So yeah, it is slightly less than a fully marketed deal, but it is certainly not off market.
Yeah. It's not like you finding your own deal talking directly to the...
Not at all. Not at all.
That's off.
Yeah. The way to do that is exactly what I just said before, is to actually find your own deals, contact the sellers, contact the lenders, contact other capital providers, see who's looking at certain deals. You already have the firepower in your team or in your people that are surrounding you to be able to uncover some of those deals. You already have those people. You just need to ask them. And most people don't ask the question. Most people just don't bother to ask. Ask your lenders, ask your capital partners, ask your friends, ask the people that you come across and that you meet in conferences. Hey, do you have a deal that you want to, if you don't have a deal, do you know anybody else who has a deal that they may want to let go? And that's the way to find true off-market deals at that point.
Yeah, most definitely. So John, based on the fact that now your business is really all about providing liquidity and capital for operators, I'm going to go out on a limb and assume that you become very good at raising capital. That's a big part of the whole thing. So tell us a little bit about that side of your business. Sounds like you've got a couple of things. You've got your own fund, and then you've also got connections with institutional type folks as well. So
that's right.
Explain a little bit about that side of your business.
Yeah. Actually, the raise part of it was more dominant when we first launched Peak 15 Capital at the end of 2020. So we decided to kind of bifurcate our business and have a business line that only provides institutional capital to developers and operators, and that's a fee-based business for us, which is essentially being like, I hate to say it, almost like a placement company or placement agent, which I despise that term because I think most placement agents are annoying and they don't know what they're doing and they don't look at deals the way that they should.
Capital connector, how about that? Is that something?
Capital connectors? That's right, capital connectors. So as the years went by and as we launched our fund a couple of years ago, we decided to reduce that side of the business more and integrate it, have it more of an integrated part of our co-GP and our partnership. So when we have a deal that come to us, and we first and foremost, we look at every deal as if it's a deal that we would do ourselves. We would look at it. It depends how good it is, and depends how attracted we are to that deal. We would underwrite it. We would look at the assumptions. We obviously would talk to the current sponsor or operator on the ground on it. Make sure we understand them and their formula, and know enough. Get to know them and their background and what they've done, because they are more important than the deal, not just the deal. The deal will get our attention, but what will keep our attention is the operator and the people behind it. Because deals come and go. People are here to stay. That's who we're doing business with. We're doing business with the people, not with the apartment community.
Got it.
So when we look at deal like that and break it down, then we can say, okay, so we can come in with that much money from our fund, and then we can also bring in one of our institutional capital providers that we have a program. We have about a stable of not it's a short list. We have probably about 50 institutional capital providers that we partner with on a regular basis, who know us really well, who know our deals, know our underwriting, have seen us on, they know and trust that when we send them a deal, it's a good deal, because we vetted it already. We underwrote it. We at least looked at the numbers and made sure that it's a good deal. So we either come in on the deal and bring them with us, or if we don't come in on the deal, we could at that point, for one reason or another, then we can maybe take it to one of our institutional capital providers and still bring the equity capital, the LP or JV capital to the table if we're not coming in as a co-GP. And that happens for a multitude of reasons. Because I'm sure your next question is going to be, well, why would you pass on a deal? Why would you send it to one of our institutional partners if you're passing on it? It's not because we're passing on it because it's a crappy deal. A lot of times we pass on deals for either because we just don't have the bandwidth. Maybe we have too many deals on the table right now for us that we have to work through. Sometimes just bad timing. Sometimes we just had a closing and we just need some time before we pay attention to the next deal. For whatever variety of reason, a lot of times we pass on deals to co-GP just because outside of the fact that it's not a good deal. So, because if it's not a good deal, we're probably most likely not even going to take it to our institutional partners.
So you don't want to wreck your reputation with your institution.
Absolutely.
But when it comes to your fund, John, are you raising capital for your fund? Is it pretty much capped out right now? Who are the investors in your fund? Tell me a little bit about your fund, if you would.
Yeah, we are raising cap. We are still raising capital. We're a couple millions away. We're about 3 million away from closing it out. So we may end up closing it by the end of the year. It may take us until January, but we're pretty close to closing this particular fund. So, and those investors that invest in our normal and our GP fund right now are retail investors, high net worth accredited investors. We don't have any institutional investors in our fund. All the investors in our current fund are retail accredited high net worth investors. Our next fund that we're launching next year is going to be very different than our current fund. It's going to have a JV component to it, LP component, as well as a co-GP component. Wow. So we'll have a lot more capability to kind of zig and zag in different parts of the capital structure, the capital stack that we do today from our fund.
Very cool. Interesting. Well, you're up to all sorts of cool stuff, John. If people want to connect with you, where should they go?
The best way to find me is on LinkedIn. I'm very active there. So just find me there, John Azar or Jalal John Azar. And I'll just connect with me and DM me, and I'll follow up with you. Obviously, check out our website. It's big15cap.com. And you can find out more about us there as well.
Awesome. John, this has been a pleasure. Thanks for being on the show.
You're very welcome. Thanks so much for having me.
My pleasure. All right, everybody. Take care. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.